let's see here. Let's go ahead and get started. Elliott Wave Sage here, and then this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. So, where is the market and where are we heading? I'm gonna start out while we get some people to sign in. So just give me a second to get situated. Okay, so where's the market, guys? There's just a couple things you want to pay attention to on a bigger picture. We came out of, a couple patterns that we need to respect. You have this cup and handle breakout. Okay. Again, this is just pattern trading, nothing to do with Elliott waves, which, is pretty reliable in itself. And then you had this breakout of this consolidation in correction here, and we really have never looked back, as you can see. And then finally, as you can see up here, this was that retest of the high, and we also have a breakout there here. So what I think is going to happen at some point is we're going to backtest this. You could say, could that have been the backtest right here? It's unlikely given how weak. I'm looking for something more severe of a backtest. Almost like I thought this flash crash, if you want to call that a flash crash or whatever happens, that, and it really spooked the market, guys, what happened here. There's a lot of people so afraid. And the thing is, they're only afraid because we just have been so easy going up. I mean, a correction, a 300 to 400 point down day is nothing. Like in one day. I mean, we've had flash crashes coming off the 2009 lows where we're down 6-7%, and you're like, what the hell just happened? Now that's something to get worried about. Now this was nothing. This was nothing, but it also could be the start of something much bigger. So, more than likely the cycle's over. The cycle's over. In my last update, I said we were in this fifth wave, and I believe it's over. So what does that mean? What does that mean exactly? You could see the RSI reset was pretty serious on the 45-minute. Massive capitulation. So this was really freaked a lot of people out. A lot of weak hands blew out. But though the 4-hour, you didn't get that reset. For some reason, I'm seeing people on the internet, saying the 4-hour is not reset. I don't see no 4-hour reset here. I see a break of cycle with the divergence. So that's why we could still be in 2, and we could still see this push down in a 3-wave move. But I still think this is an opportunity to go long if it happens, as long as we're above 453. So the thing I need to point out is if we're above 453, the market is bullish. The market is going to go higher. Cannot unravel unless we're below 453, because a 453 lower close would mean a false breakout of the cup and handle. It would also mean a false breakout of that consolidation I showed you earlier. And I do believe that would set us up for potentially catastrophic selling. And I do mean that. But as long as we're above 453, I think every dip is bullish and it's an opportunity to go long and not short. That's just my take on the market. So I do believe it's wise to be more aggressive on the buy side with these dips, that happen. So now what if we keep extending higher? If we keep extending higher, well, some people are like, oh, this is a 4, and this is a 1, 2, and this is your 4. The reset is too severe. This whole cycle corrected on that flash crash. So if this is done, it's a 2. It's a 2. And actually that makes sense because that will get us up to our sell area at 520 on this wave 3. So this could be a massive bear trap And we could see some significant buy-in going into January and really see the sell-off start in February, which is when the Volmageddon happened in February. And we melted up through the end of the year into January, and it was February where we peaked. And we may be following that same cycle of mania, and we may finish up like this and get that extension here, just like I have shown here to finish this move to set B here. So I just would not recommend shorting this market while we're above 453. I just look for opportunities to buy, and then I'm looking at individual stocks for long opportunities on things that have been lagging but are showing good setups. And there are some growth opportunities out there that show that, and I'm posting those, just like I posted them back when the tech opportunities showed up. Back here, if you know my videos, you guys have followed me back here, I was saying go long tech right on this breakout of the Qs on the downtrend, right? And I got made fun of. I even got death threats, and I shut my channel down for a little bit right there on this breakout right here. I was like, go long tech, and everyone. And I think what happened was I was giving people the answers to the test, and I think it pissed off some really big trader, some pro trader, and they didn't want you that follow me to know to go long here. But we were long tech and mega cap, all that shit back here. We got out right around here and stayed out through this whole, whatever you want to call whatever this was. And now it's time to get more aggressive again for this push. So we didn't get the whole move, but we're managing our risk accordingly so we get the most reward with the least amount of risk. And that's how I trade. So this type of move is what we may see. And here you could see we saw that sideways action. You saw this you see this fractal here, right here. It's very similar to the one we just came out of up here and broke out. And you see this consolidation, this congestion. It's kind of like what we had here. And then we had this ramp, the first ramp, the first sell-off, and then it kept going. So I do believe we're in this this kind of run. And whether the market deserves to do it, it should do it. You're smart enough that it won't do it because you're playing the market like it's chess. This shit isn't chess, it's poker. And poker means that the pot is going to be built bigger. I think the bears are going to go sit on the sidelines and wait for a better opportunity to really slam this market because there's really no news. So why waste your firepower? If you're a seller of this market, why waste your firepower until you have some news event that you can leverage to really drive the fear. So that firepower is sitting in there holding their cards tight. The bears are holding their cards tight and they're just letting the pot grow. And believe me though, when they're going to play this card and they're going to slam this market down like we've never seen before, but I do believe the pot's going to grow bigger and trap more people and more investors, and they're all going to FOMO in up in this area and they're going to miss the move. No one's going to see this final push coming, the 510, 520. No one's going to be part of it. Everyone's trying to top tick the market, even Kramer and them. They're all getting out now. And I believe that is not the right move to get out. I believe getting out would be smart over here, not up here. Here you want to be more aggressive with buying the dips to prepare for this potential push higher. And then here you need to be very cautious, and we need to really think through the strategy when we're up in this area. And we are coming up in this area, guys. It's going to happen. And yes, there'll be a massive rug pull. And God's 2024 is going to be a catastrophe. And I don't know why it would be, but that's what this chart is saying is going to happen. And again, the long-term chart, if you're interested, is a catastrophe. The election's probably over. Oh, it wasn't, the end of the world as we thought. And then we come out of it in a pump of all ages. And, Moon Boy will be vindicated, and we get a massive blow off top, I think, to Dow 100,000, SPY 1,000. And then the crash of our lifetime happens from that level at this level that I think everyone's hoping for. So I do think this is the chart I'm looking at. My long-term chart looks something like this right now. Rug pull, and then massive pump, and then historic crash back to the '09 lows. And this is the cycle. That's what I think is going to happen. But you guys can do whatever you want to do. But I'm just saying right now the charts tell me the market's got more upside before this B can be dropped. So let's go to your questions and answer them. GME, the first question you guys have is GME, of course. And yeah, I do like it. It's coming out of a massive correction. And again, if I go to it here, let's take a look. Buying GME now is like buying Apple and all those stocks when they had their original breakout. It doesn't look obvious to many people right now, but I'll just show you a couple charts that make it, again, a real nice setup. You have this inverse head and shoulders. You have this left shoulder, this massive head, and we're forming the right shoulder. We're in the right shoulder of this formation. We did correct in 3 waves. It's in a buy area, and we're coming out of that. So we could be pushing into its breakout, and that would coincide with that chart I'm showing you in the indices. And if we get this breakout, we should get to 22 and possibly to 27 on that first breakout. In this wave 3 move I have shown here. And then I do believe when the indices rug pull and B, it may give up almost all those gains that I have here shown, just like I have here. And then that would just be 2. And then we can then it could have the historic run, and you can use your imagination. That's what I think will happen with GME. So I do think right now is an opportunity to buy. I think that's the flash crash gave you an opportunity to get in on that trade. And now it's bullish again, 1649, and it should squeeze higher. And we'll see if we can get this breakout and get this breakout. Now, I look at GME and this right shoulder. The only negative is, this wasn't very big, so this may not be that big either, but it could use a little more time. But this is where you want to go long now. I know you follow these guys. They're always like buy calls, and they'll tell you to buy the calls up here, but smart money's already buying down here. So a lot of people you follow will be chasing this move when we're at $20. And all the guys you follow on the internet will be like, buy calls, GME, oh my gosh. But if you're following me, you're already long GME at 1640s, 1697. And then those people are going to help give you liquidation to take some profit from this move, this move. And then I think it still could run. But I think this is my take on GME. And fundamentally, I don't really care why it would do that. But this is the count I've got: 1, 2, 3, 4, 5, and of course you always have to respect the double correction. So we'll keep an eye on that. And then it's just we're just still in 2. But this is you need that. This is for strong hands, diamond hands, someone that has the big picture, the patience, and money management skills. Will get the reward on GME. That's all I got on GME. The TLT, let's look at that. I hadn't looked at the chart, see if there's some key levels that are breaking on the TLT. I do know it seems like interest rates will want to go lower and maybe hit that 3.2% target. Now, the one thing we have to keep in mind with the interest rates is we are in a wave 2 correction now. And wave 2 could even go back and retest the lows, and the lows are like, 0, right? So we have to respect that. So this was it. So it looks like A is almost done. So we should get one more pull. So TLT should be pulling back in B, and then we should get C, and then who knows? Then who knows? So it's correcting the whole move. It did hit a buy area down here. I still didn't like the setup. But it did hit technically the Fibonacci where it should have bounced, and it bounced nicely. But I think it's ready for some type of pullback. But let's look at the cycle closer. And you could see that we're just starting to get that divergence. So this could be your first 4-wave forming. So it probably still has some more upside in the first 4-wave here. So it's probably got another push higher coming. And then it's got to pull back in B. But just remember, B typically will retest the 4. So if the 4 is shallow, the B will be shallow, and it will be a shallow connector. So I wouldn't be looking for something like this unless this 4 can go deeper. So I think it's going to be a very shallow B. And then I do think C will really help. And this is probably what's going to fuel the market higher and growth higher and cause the rally. But I do think what will more likely, as we get up into this area, then I think inflation will come back, and then the news event will happen, and then the market will take that swing down, and rates should come back up, and then who knows? And then that's where you get the rug pull in the market. But I do think it's pretty safe to say you have 5 off the low here, and you're going to get C, and this should support the market higher because it's been pretty. So this has been accelerant on the stock market, which is why it's been hard for the market to find any downside, because the bonds are working, rates are working with the market for once. So the IWM, it's a really easy way to trade the IWM. Again, just using some chart patterns. And I wouldn't, you have this massive consolidation. Look, this consolidation's gone on since August 22. You have a breakout, and you already have a back test of this, actually several times. So essentially, it's a no-brainer. You go long against 196. And I was, on my last video, I said other than the SPY 453, the next key level was 196 on the IWM, and it actually backtested. The market used that flash crash as an opportunity to backtest this breakout, so it held. So the Russell is extremely bullish right now, guys. And I think these targets are very easy for it to get to, or potentially even higher, before it does have its rug pull moment. And I mean, I'm just was kind of thinking in the Russell, you could see this kind of X wave. And again, the X wave can go all the way up. There's no stopping it, and it can even make new highs and really blow up a lot of traders up to 263, and then you can get in an ABC correction something really vicious, and then a rug pull, something like that. You get something like this. So you can't be bearish the Russell below 196 IWM. You just can't. So this will support the growth, the small caps. So this is not just the regional banks and oils. This is also the GMEs of the world, the FUBUs, the shit stocks that are out there. This is going to be support. So this is something I want to be aggressive above 196. You get these dips. We get another dip. Let's say next week in the Russell, I'm trading against 196. I'm trading against it on the long side. If we can get a three wave move down, back to 199, 198, I may take a highly leveraged long position on the Russell here against 196. And that's the thing, you have to use a stop loss. Now, if we fall below 196, that's probably your first warning sign. The market is going to unravel, and then we're on our way to retest 453 or break it. So I would be looking for it. So that's what happened here. So this back test, this flash crash, the Russell stopped the flash crash. This could have dropped more. This could have dropped to 453, and it should have easily done that. But the Russell saved the market. It's very technical. It's a very technical what happens on that on Wednesday or Thursday, whenever this happens. It's very technical. So this is going to give a lot of longs confidence that it held. It held. So this is why it's time to now the risk, I think the risk reward to the upside is not, the reward to the downside is very minimal because you have levels, you have some really good levels to trade against now. See, up here you were trading blind, right? You were trading blind going long. You're buying long here at 202. I mean, hell, we could have dropped all the way back down to 180. I mean, you could have had a real flash crash. But now that you saw this test, now it's like, okay, we've got some key levels. We had a shakeout. The VIX corrected in 3 waves. You're set up to put more money to work on and get this upside. So that's how I trade the market, and that's how I trade it. Now, I wouldn't get too comfortable because there will be a rug pull coming. B is going to be set, but I don't think it's time yet. But anyway, and as you can see, this little dip corrected this whole cycle, and now, you know, again, it's more than likely just going to keep squeezing higher. Oh, thanks for the 10. Thanks for the 10. I really appreciate that, man. I appreciate that. Big Nick. All right. Let's see here. GME, TLT, good morning. MSOS. MSOS. Okay, let's take a look at that one. I just hadn't, I don't know if we've ever done that one. I mean, our list, I've done so many stocks. Okay, it looks like we have done MSOS, maybe for you even. Let's go to it and see how it's looking. So we were looking for this pump up to 12. It looks like we're getting it. One extended. It looks like we're in this 2 wave. Now, here's the thing. You see how you bounced here, you corrected this, but then you made a lower low. So the 2 is going to take some time to play out. I don't like this to trade on the long side, but it could still squeeze higher in a flat. So I don't particularly like the setup because of that lower low there. And looks like to me you're going to get something like some kind of flat, something like that. So if you're long it from these areas, it's like worth holding. But I do think there could be another opportunity. So it could fail at 684, $7 here. We could see it fail. And then you could see it make another low at 581 later. And then it may be buyable at like 581, 550 for the wave 3 coming out of it. Something like that. So I'd be looking for this type of correction. Something like that. Because it made the lower low, I stay away from it on the long side. It doesn't have to do that. It could be B, could be done. And then if that happens, if we can't break the 670 high, but I think it's going to do that. It could even come back and retest the low in 2, but I do believe this looks pretty impulsive. It does look like it needs another swing higher. Okay, so LPG. All right, let's look at LPG. Dorian. All right, let's take a look at Dorian here. So we were very bullish on Dorian, and it's just, look, it's just extending higher. I hope whoever was following me listens, because it's been in a massive 3 of 3 moment. So the first thing we want to do is see if divergence is erased. You see you haven't taken that peak out, so it's actually still got more upside. It's not even done, not even there yet. So this is something where you want to be very aggressive and buy in the dips against. There's your first cycle there. So yeah, I'm like, so that's too short to be a wave 3. So I'll probably label it something like this. Yeah. Yep. Something like that. So we're in this 4s and 5s now. And it looks like to me you're about to go into wave 3 of 5. And there's always a chance it could take that peak out, and then this becomes a 1-2, and it just keeps going parabolic. So I don't know, it just could keep going parabolic, but look at all the three, like it's got a lot of more upside potential. But as each wave 3 ends, the wave 4 will take longer and longer to play out. So essentially the easy money is almost over in this, but it still should have more upside coming. I think the thing to watch here is if this divergence is erased. If this divergence is erased, then you're going to have a 1-2, you're going to have a 1-2, and it's going to go 3 of 3, complete like mania mode up to $82, and then it should hit $100. So I would not short this at all, and you need to respect the potential extension, acceleration, taking this peak out and having a massive parabolic move. What does this thing do? Is it natural gas related? Yeah, natural gas is about to come out of a massive correction. It may have, yeah, see, that's why it's going parabolic, man. Because natural gas, I told, if you guys followed me on my last video, I mentioned natural gas needs to take out this peak, and it did. And that marks the end of the correction. This correction is finally over, right? It's been miserable. So natural gas is about to run, guys. Natural gas is about to run. It's about to run. So that's going to help those stocks, the natural gas. So I think that stock is just running ahead of the commodity as natural gas pumps into these areas that I've got highlighted. So yeah, natural gas is a great long position now against. So now you have a tradable position on the long side of natural gas against 238. Low risk, high reward, and that's what's happening. People are pouring it. The traders are going to start pouring into this. Momentum traders, because you're going to have momentum breakout on natural gas. That's what's happening. That's what's happening here. And it looks like some companies are already getting ahead of it. The producers, the transports, something like that. Could still be in 2. Could even still do something like a run in flat. So if you get this pullback, this is a gift to go long against 239 to play that. If we break 238, then it's risking a retest of 22, but more than likely that's going to even hold. So all right, let's keep going. Let's keep going here. Is this a membership? No, it'll play. Video play. There's no membership. Mine's free. I take super chats if you want your question answered, because usually some days I'll get so many people join you won't get your question asked. But if you give me a super chat, I go right to your question, and I only stay on for about an hour typically. And I don't do these live streams that much, but it just depends if I've got time. Yeah, Tesla. Remember I had Tesla to the moon? Yeah, on it. So Tesla will succumb to the rug pull and B, unfortunately, but it's sad. I have to respect that analysis. Now, I guess before I show you Tesla, the thing about the market, I call it the moon boy scenario. There's a moon boy count, and I've always laughed about this because there's a couple guys that I follow that play the moon boy, and I'll have to go to a clean chart here for you guys real quick, and to show you moon boy. I'll show you moon boy because moon boy, they're in some ways. I mean, they could be proven right, guys. I'm not saying it's like a joke. I mean, It's possible they're right. The count that I have and everybody has is wrong, but they have the long. So this is the most common long-term Elliott wave count right now, right? Something like this, right? This is my count. This is my count up to 1,000. Okay, this is my count. This is my count right here. And this too is supported. This too will be supported at like 320. And here's the thing, it could be a run-in flat. So it may not even break this low, but whatever it is, it's going to be like a reset of the daily and weekly stochastic when this happens, maybe in the monthly even. But here's the thing, this is my count. This is my count. And then of course the crash of all ages, and we finally fill these gaps that have been built in all the way. We probably more than likely come back to 214, but we probably could go even lower. But anyway, this is my count. So what is the Moon Boy count? Is something a little different. And again, there's a few guys out there that believe this. And the more we extend in this kind of crazy manic, I call it mania, is something like this. And again, I don't believe in Moon Boy. It's like this. It's something insane like I'm have here. My guess is if we do something like this, and this is like a massive blow off top, then yeah, in 2026, the SPY is going to be trading up here at 800, 900, and people will be left behind. The Moon Boy will play out. You'll get a massive pump, but this has got to be like some kind of hyperinflationary impulse in the economy. This has got to be like the USA turns to Venezuela's. Because if you look at Venezuela's stock market, this is what essentially it did in Argentina. Like they didn't crash, like they went parabolic like crazy. Like this has got to be like, to me, gold's 10,000 an ounce, silver's 300 an ounce, inflation's double digits, the interest rates are ridiculously high, and they lost control of the financial system on inflation. But this is Moon Boy. So like the people that are like, oh, it's Moon Boy, this is the count, we're going up. Yeah, this may be great. You're trading at SPY 1000 in 2026. Good for you. Good for you. You're a millionaire. But hey, guess what? A loaf of bread is $10. Your Ferrari now is $1 million and not 250,000. Your Toyota, Camry is now 80, 90,000. Good for you. You got, but hey, your SPY is 100, is 1,000. You were right, but you can't buy shit anymore. That's what I think this chart is. So, but you got to respect that. You got to respect this chart because we're seeing signs of that type of thing. But the inflation in the CPI is not going up yet. But we have to watch gold and silver. I think gold and silver is the clue on whether that craziness. So if that happens, yeah, Tesla's going to go through the moon, like I have it shown, like shown earlier. That's what the chart could be predicting. So now let's go back to the chart on Tesla. And what's the clue? So Tesla will need to have a breakout of this massive correction it's in, and we're just not there yet. We're just not there yet. But we're getting to a point where we got to start wondering. So here it is. There's the line, and there's the level, 272. We break out of 272. Then there's no more downside to Tesla. And maybe it's because Bitcoin's going to moon, and they got Bitcoin on their balance sheet, so maybe they aren't selling any freaking Teslas anymore. But maybe Bitcoin goes to 300,000-400,000 as the financial system falls apart through hyperinflation, and nobody wants the money anymore. And so maybe Elon Musk buying Bitcoin is the smartest thing he ever will go down in history as the most genius CFO power play move that's ever been done. Perhaps that's why it moons. It has nothing to do with cars. Or maybe oil moons in the hyperinflation, and people are going to buy Teslas because no one can afford $300-400 oil, which is $20 a gallon gas. Like you don't know. But this is the chart. So if we're below this, it's still in a correction. And so you still got to respect the downside rug pull. And so I gave you guys a setup. I said that Tesla would pump out of this move, and it did. It did. And You have 3 here, right? You have 3 here, right? 3 here. You have 3 here. And now you have 3 here. So it looks like to me it's coming up to test 272. It's going to test this 272 level, and I don't know if it's going to break out or not. I can't I'm not a fortune teller, but I would not be bearish on Tesla right now, given the chart and where the indices are going on the short term. Could it be this? It sure as heck could be. And right now, if you look at the individual cycle, this pullback is up in 3 and down in 3. It's in no man's land. But if the market were to sell off more next week, or Tesla could sell off back to 244, that is a great opportunity to go long, especially a back test of that downtrend line of this smaller correction here at 238. So if the market will give you this gift, if Tesla drops to 241, 238 next week, that's a massive gift for a long play up to 272, which I think will play out. And then I don't know. And if we're at 272 and the market's at 500 SPY, then you got to be careful for the grand finale in this correction. The grand finale, which is going to be something like this. Bam, bam, 150, 142, or perhaps even worse, 68, 70. So this was my chart I'm showing, but we have to consider other options given what we're seeing in the market. But it's still not there. We break out of 300, or more importantly 272, then this is the correction, and it's a 1 2 1 2, and you're going to go parabolic. And yeah, it will go to these levels I got here, and this is from my video. So in my video, I posted these buy areas in Tesla, by the way. I mean, that's why I put it on Twitter, guys. I put this on Twitter. But this is why you got to have patience, right? Like GME, right? Like there's corrections, right? Like I was like down here, you got to buy it. And even here, I was like, buy it here at 151. Like, because you got to have the big picture, but these corrections are going to happen. And even if we come back to his $60 level, it's still going to be up here later. Like I showed you, it's still going to be, but you're going to have to hold through all that. You have to hold through all that. But that's where we're at right now. That's where we're at with Tesla, and you'll have to do what's best for you. But that's how I trade Tesla. That's why I look at the market right now. Something like that. OMG X30. I'll look for that. Let's take a look at what that is. Yeah, I'm not sure if you could tell me what it maybe if you could tell me what it is in TradingView. If it's not coming, it doesn't look like it's coming up for me. Oh, OMX. There it is. Sweden. All right. Sweden. Huh. Just like everything else. Very interesting. Okay, so there's not a lot of data, but technically, if we could get a breakout at 2471, you'll have a bullish move higher. So you never got to the buy area down here. So Fibonacci level, it does look like an ABC move in a 1, 2, 3, 4, 5 pattern. Too much divergence. So again, this is foreshadowing the rug pull that's yet to happen. But it could, again, it's probably gonna do some kind of flat type move. Although this could be the flat, actually. So you can't have divergence here. If I put the 1 there, I could put a 2 there with divergence. I think I'll do that. Looking at the chart closer, looking at this move, it looks like in 3. So it looks like it did some kind of flat. right? You see how it did that flat here? This is what the indices are going to do. It's going to break to a new high and then just collapse. So that's kind of what I expect to see in the indices. So this to me looks maybe something like this, you know. Yeah, something like that. But 1, 2, 3, 4, 5. As you can see here, there's a lot of divergence at that peak. So the only thing is there's not a lot of chart data here. So it's tough to say. Here you bottomed with no RSI divergence. So that looks like a pretty good low to trade against. So I would look at it this way. So we should be pulling back in 2 at some point, right? And this 2 could be pretty sharp and take time. So I'll be looking for something like this at the moment. And see, we're already correcting the cycle in a sideways. So this is a sideways correction in 2. So we're already in 2. And it's in a sideways correction. So I don't think 2 will go very, very deep. You look at the fractal, it's in 3 again. So it's probably got another leg lower. I mean, this is just too shallow. So it's probably got another leg lower at least down to this area here that I have highlighted. So it looks like to me the move from this low is over and it's correcting into at the moment. And yeah, technically it could come all the way back down, but I think it's supported against 2025. But I do think it's in a correction. It entered a correction on the 4-hour cycle. But again, don't be too bearish on it. Perhaps there is I could force a 3-wave move, a potential long opportunity here, right here at 23.55 in this area. This could be a to try for that wave 3 right in this area here, just to give, if you're interested in going long it, laying in there. But again, it could just keep extending lower, but it should bounce. You should get a bounce here, at least, even if it's going to do that. But anyway. All right, let's go to Nirvana. Let's see, do you have any question? Let me look through the chat. Do you have, if you have anything, Nirvana, just, okay, there it is. Oh, MOS, thanks, man, for the, appreciate that. I hope that MOS helps you. Thanks for the super chat. Merry Christmas. And Hood and PayPal. Yeah, let's go to Hood first. I mean, Hood is benefiting from the growth and Russell upside, right? So Hood is one that I had done earlier for somebody, and I told you guys to watch out for this pump. As you can see, I have it going to 16. That's where we're going, guys. So this A wave should be ending soon. This A, it should be. Now, could it be a shallow connector? I mean, it's possible. That's the connector. So yeah, A may already be over, and that would make sense because the Russell's already back test. So this A could be in. We could be already in B. We could already be in the C wave. And this is just 1, 2, 1, 2 in the C wave. But I'm looking for levels up here at $16.49, $17. If it were to rug pull, then it's just B playing around in this flat. But it would be a buyable dip against 1131 if it were to do that. Something like that. But then I wouldn't, you could go long Hood here, but if this happens, more than likely the Russell's retesting 196 again, and I'd rather go heavy leverage long Russell than long Hood. But that's another way to play it. If you don't want to go leverage long IWM, you could just buy some of these small caps and just use that as like your upside you're like a call almost, because these will have outside gains to the upside if the Russell's going to go higher. So something like this. So this is what I have right now. So I still think it's got more upside potential. And again, there's no rule that says Y has to end at 17. It theoretically can keep going as long as it wants to. But I do believe, because if you look at this, it's only 3 waves. It's only 3 waves. And we need to take this divergence out, and I think it's going to. Now, the other alternative, there is an alternative view, and this was my original view with this all along with Robinhood, but I think my timing was off a little bit. Was it some kind of 1, 3, 2, 4, 5, and we do something like this, and then it rug pulls all the way back to 782. To negate that, it needs to take this divergence out. I think it's going to do that very soon. So there's no trade here unless you get a pullback. If we could get a pretty good pullback, there's a trade again long against 11. If you run, then that's fine. But really the trade was down here when I did my video. But I do think Robinhood still has more upside coming, because you see this cycle, this move corrected the whole thing. It didn't just correct this little leg, it corrected the whole thing. So that's why I don't like the 1, 2, 3, 4, 5 option here. I like this option. But you'll have to do what's best for you. But that's Robinhood. And then what's the other one you wanted? PayPal. Yeah, PayPal. We were, looking for one more low on that, I think. I just don't remember. We did the update on that. Yeah, so we're looking for this final 5th wave. So we're at the moment of truth for PayPal in this 5th wave. Could I be off? The thing is, when you get to the last swing on an Elliott wave swing, it's always tough, because you could have your swings off by 1 swing. It's so easy to do. So what would I look for? Breakout of the downtrend. So here's your downtrend. It's actually struggling here. It's struggling, right? Look at these candles. So it seems likely that it's bearish against 64.11. It's got to break out. If it can break out, I would say a close above 65, 66, then it's a great investment long opportunity for long-term investors that believe in the company, right? You got to believe in the company if you're going to be a long-term investor, right? But if we could break 67, even if you would say you want more confidence, we get it to in the 70s and break out of whatever this is, then I think it's safe to say the correction's over and it's entered a new bullish cycle on the grand super cycle, as long as the company doesn't go bankrupt. Because these companies can't go bankrupt, guys. And I don't follow it, but I do believe if we can get that breakout, then it's a long-term investment opportunity for people that are, love it. But I wouldn't do it here, because I still think it could make one more low, maybe at 47, 48. And then I think at some point you have to say either you want to believe and be an investor for your great grandkids and own this forever and ever, or it's going to zero. And I think the go to zero number on PayPal would be the low, obviously at 30.11, and we would need to see a massive capitulation move. Where this is a 1-2-1-2 and you get a massive 3 of 3, and we get like an earnings like calamity. So I mean, that's always a chance, right? So nothing's risk free, but this to me looks like it's ready to roll in this 5th wave. But we'll see. It's testing the breakout. We'll see if we get this breakout. All right, I'll keep going. I got about 10 more minutes. Yeah, daily market recap. Yeah, I want to grow my followers. I said my plan for this channel is to grow my followers more. And then yeah, maybe at some point I've done enough and I can just do this more full time and start my own service where I can actually give you guys real trades, entries, like you guys follow people or pay already. You may be a member to services that do it. I promise you I'll be a lot cheaper than those guys if I do that, and a lot more accurate because I'm not as bullish. I notice because the bull market bails you out of mistakes, right? Because we've been in a bull market since '09. So if you're a trader and you're not that good of a trader, you can always say buy the dip, and chances are the market will bail you out of your mistakes, right? Because but eventually that day will come to an end, and then those guys are going to lose all their money. I do think this move will be one of those moments. A lot of bullish day traders will probably go out of business here on this move, and they'll miss this gain. And the other one obviously is the one I'm showing down here, this one. This B wave that I have here, this will probably be a sideways market potentially for years and years and years. I mean, this will probably chop up every day trader imaginable will be gone out in the market at that point, only to have another rug pull later. So I do think the time for the bears is coming. But I do think a lot of day traders are like buy the dip because the market bails you out if you get the wrong call. Like they were saying buy the dip here, guys. I mean, if you were following me, we were shorting all these bearish patterns all the way, and then stopped out of the short position. NASDAQ stopped out way back here. I mean, geez, I stopped out of the short position on the NASDAQ here at 354. And then the IWM, we stopped out of the short position here at 177 with an entry at 175. I mean, we only lost like half a point on the IWM. So, I mean, but we got all that downside. But those guys saying just buy the dip. They were just saying buy the dip even down here. I was like, why would you be buying the dip? So eventually, if we break 196, SPY 453, we ain't gonna be buying the dip anymore. It won't be buy the dip anymore. It won't be buy the dip anymore. We're gonna have to reverse our thinking. But until then, it's buy the dip again. So that's why you're going to get now you got two sides of the market agreeing. And like I said, sentiment, when we're up here, even those bullish guys that are like buy the dip, they're going to be saying buy puts. This is ridiculous. And that's going to come. That tweet will come, and I'll definitely share that on Twitter when I see it. When I see the most bullish day trader service guys say, "Oh my gosh, it's time to buy puts." That's when when we're up here, that's what you're going to start seeing. Because they're going to say this is even ridiculous beyond what we even think is possible. So, all right, man. ARC W. Oh, Mara. Okay, yeah. Oh, sure, yeah, Mara. Mara. Mara is kind of sad in some ways, unless you guys took the trade. Because Mara was too cautious. I showed the buy here at 7. In fact, we called 7. If you watch my videos, as we were in this correction, I'm like, the rule of thumb in this market is when you have overlap in 5 waves, anytime you have overlap, you guys, you got to understand this. I don't know why this is the case. I don't know. There's no textbook. This is just my experience trading. When you have overlap in 5 waves, the market always corrects between the 2 and the 4. And so I said, hey, we're correcting the cycle, and we're going to go between the 2 and the 4 is like $7. And sure enough, we hit 730, and it's essentially mooned in a 3 of 3. So Mara is in a new grand super cycle move higher. So Mara is one where you just got to hold it for the long haul. It's in 3 of 3. I mean, it's in a 3 of 3, guys. And does it deserve to be? I don't know. Here I was too cautious. It was lagging, right? It was really lagging Bitcoin, really lagging, and it folds because you had to respect the double bottom, and even here you had to respect it, but now it's clear. So the people that took that risk Because you could have went long against 7 and just took the risk, and looking back, I should have done that. But people that did that got paid. But there was a risk, because if you longed at $10, you could have still lost 30%. So it still was tough. It was too cautious. But now it's paying off. So now we should get a pullback. But that's just the dip. It's just dips to buy. Because this is gonna run to new. This is gonna break $83 at some point. I don't know when, but at some point it's gonna break it. So and so I think it's clear. The market is saying, Bitcoin and crypto and our situation, maybe with the financial markets, is in a precarious spot. Silver and gold are saying that. So I don't know. I don't know what the mean of all this. And again, we could get the moon boy market scenario. Moon boy market scenario in a hyperinflationary melt-up, which has never happened in the United States history, which would be perfect, because those are the typical things. The crises that people say are, you're so stupid, Elliott Wave say. That's the dumbest thing to ever say. We can never be Venezuela. We'll never have $20 bread. Well, do you think when bread was like 5 cents, they thought, hey, bread's going to be $2 in the 1990s or whatever? They probably would have said the same thing. I mean, we don't know what the future holds. We could be in a hyperinflationary melt-up. The Federal Reserve may start losing control of this, and that may be the rate spike, but it may be too late. It may be there ain't no rates high enough to control the liquidity's out. It's loose. It's already out there. They can't rein it in. And this is the Peter Schiff scenario, right? The guy that saying buy gold, and you want to buy gold and silver in that situation. So, and Bitcoin's starting to show signs of, so something behind our financial system is looking very hyperinflationary from an asset standpoint. Whether you think growth is going on, something isn't looking right, because if these things are, if Bitcoin's going to go parabolic soon, and you got stocks like Mara and the growth and everything, and if the Moon Boy scenario plays out, if it plays out, I'm telling you, I don't think that's a deflationary spike. I think that's hyperinflationary, out of lost control. That's just my guess, but you guys can do a see. But this is the count. So I think dips are bought about around 21.96. So I would be bullish buying the dips on Mara against 21.96. Every dip above $22 is a buy. So we're in a correction on a shorter, so this could be an opportunity to get in. All right, so you missed Mara. You want to get in on Mara. So here's an opportunity that may present itself. 25.83 could be an opportunity to get in with a stop loss at 24.90 right here. For at least a trade, and you can start building a position, but it's in a bull cycle as long as we're above $22. We break 22, then it's a 5, and then it could correct. It could actually correct all the way back down. So then it's not worth the risk. Is too high of a risk. But right now it could be aggressive on the long side. It can be aggressive on the long side against 22. We'll see if it can pull back into this area and continue higher. All right, I got a few more minutes. I'm just going to scan through what you guys got here. Yeah, Fisker could be in a go to zero chart. If you haven't followed me, there's certain charts that break key technical levels that don't have any bullish support anymore, and I call them go to zero charts. And it seems to work in crypto. Not stocks, they can fool you still and still turn reverse with these pumps. But like Fisker, we need to. What could save Fisker is the price of oil reversing higher. But this isn't good, guys. This chart is not good. See, we needed that low. So to do a die moment for Fisker, the go to zero moment was at this $4. It broke it. So I don't think Fisker's a good trade on the long side, no matter how much you believe in the company. Maybe it needs liquidity. Perhaps you could trade a bit bearish counter trend moves, and maybe we're going to get one of those soon. But this turned out to be a 1-2, 1-2. 3. You got to stay away from this on the long side. You know, fundamentally, I think Fisker was just too late to the game. They took too long. Like, and it's not, I don't know if it's anyone's fault, but they needed to get those sales going back in this time when they were up here, but they were just, it just took too long. They just dicked around and they took too long to get their company going and get that prototype out, and the opportunity is over. They missed their opportunity to get that market share and get some money when that was, and they're going to have to survive the bearish cycle in oil. And if they can, then there's still a chance for this company to resurrect itself, because I hate to break it to Fisker and the green. This is where the chart of oil is heading, what I got here. So oil is going down like this, and Fisker will go down with it, and so will all the other green tech, solar, all that is going to get hit. But then it will have its moment if it survives wave 3 or Y. And I do think oil will touch these levels. And again, this is the chart, and oil's important. If we do get a breakout, if this chart gets negated and we get a breakout, then we're getting a bigger consolidation in higher degree X, and then that means we're heading for 120, 127, absolutely. And then that changes things, and then you're going to see some inflationary impulse hit throughout the stock market, and maybe natural gas is telling us that. Maybe so. I have this chart on oil, but we got to keep an open mind about things. But it's still valid, right? It's still valid. We're still struggling above 75. But if we break back above 75, 76, this chart's invalid, and the X is we're still in a much higher degree consolidation in a 3-degree move in this X. And that should support natural gas and Fisker and Tesla and everything else. But that's not what I have shown right now. I'll go to HBAR, HBAR. Yeah, I haven't done a crypto. Like I said, I can't get everyone's questions unless Super Chat, as I got to wrap up here in a minute. I got some things to do today. HBAR. Oh, we have that on here. BHBR. Wonder why they TradingView calls it that. Is it down here? Oh, there it is. So we had to melt up into this area, and then we have a consolidation. So let's take a look. This was our last update on HBAR. So it looks like the X wave already is finished. Right here. It was shallow and quick. So here's the tricky thing. I could say that's X, or I could say we're still in X. But whatever we're in right now, you still got Y coming. So this is a dangerous area to go long, because X, we could still be in this X wave. It seems like it needs more time, like it's not finished yet. 3. Let's see if we have 5 off the low. Yeah, we have 5 off the low, and we have 3. Look at that capitulation. Okay, yeah, we're gonna call X done here. So we're in the next wave higher. We're in Y, and this is the first wave. So it's gonna break out. So there's no more sell in this. It's a buy to dip against and I'll give you guys the setup here. You have a lower low, so it's got more downside. More downside should happen. Looking for 846, 82, somewhere around this area for a great long opportunity. Maybe, and it could go as low as 8 cents, but somewhere in this area. Looking at the RSI, you see how the divergence was erased, and you see how this bounce corrected. So actually, this is the connector. So we made a lower low. The Fibonacci level wasn't hit, but the RSI cycle did reset. I look at the downtrend, we're still in it. So I do think this is a shallow connector. I still think it's not finished. So actually the target will be lower. It will be 8342, the buy, this area. And then this would be a great long opportunity. This is a shallow connector. Now, what would change my mind is if we break this downtrend that I have here, this line, and break out, let's say 9 cents, then it truncated, the 2 is in, and I wouldn't be too bearish on it anymore because the RSI reset already occurred. So this is possible. This will be your Christmas gift for 3. The surprise will be is this is done and it's about to moon in 3 up to these other areas that I have. Where's the target on this thing? Yeah, you kind of see the parabolic nature of the move. I wonder what the coin does. I don't know what this coin does. I mean, let me see here. Yeah, probably. Yeah, Stickus. Let me do this again. Try to give you guys a target on it. Yeah, target maybe a little tricky here. Like, so it happens you have too many lines on these charts. Okay, yeah, so now I got it. Get a feel for these connectors. There we go, bigger picture. Okay. So one way to look at it is what's the proportion this pumps to the W, right? How, you know, from a Fibonacci extension standpoint, we can look. Went to the 168 with a little bit of an overshoot. So that's one way of looking at it. So we could try to look at it from that point of view as well. Maybe 15 cents. Looking for 15, 16 cents, somewhere like that. That's if this moves corrective. The surprise would be it's an impulsive. So I'm showing this as a corrective move. If this is a 1, 2, 1, 2, 1, 2, it won't stop. And we know what happens with crypto when it won't stop. So this isn't like, you know, this is where what you do, this trade crypto is you're a buyer in these areas. And then when we get to 15 or 16 cents, you sell some of it, but not all of it, just in case it does the crazy, you know, what crypto the goes to the moon, right? That's the moon, a real moon boy. But I think right now it's just kind of like bullish. And again, I don't know nothing about this coin. I don't own it. I don't know anything about it, but somebody's buying this shit. Somebody really wants it. Really wants it. All right, so that's HBAR. Yeah, Easton, you should watch my earlier part of my video. I go through the market recap. Pod, man, Pod has really entered a bullish cycle. Pod is, people are FOMOing in that now. Yeah. So my last video, someone asked me, is the correction over? We were at like Pod 180, and I said yes. And is it over? Yes, the correction's over. A grand super cycle Pod is just going to keep extending higher. I can't tell you when the party will end in wave 2, but that will be a good dip buy. I gotta find where the heck it is in my charts here. There it is. Okay. So Pod, we had this buy area. We had a super low at 116, but we didn't get there. But this whole area was our dip buy area, but it was risky still because it could still drop to 100, 108. But this was the area. We had this three-way breakout, but once we broke, and I don't know if I think I did my video update somewhere when we were down in this area, but I said once we broke 169, you confirm 5 swings, then bullish. It's bullish, and the cycle's over. Now you broke the downtrend line. You're in a wave 3. It can just keep extending. Look at that, you know, RSI. So you have a 3. It looks like you have a 4 here. Maybe, you know, depending on how you label it. So it looks like we're entering some kind of 5th wave. We should be entering some kind of 5th wave here. Yeah, and you see the divergence. Now what's interesting about the 45-minute is, the cycle. This is why you got to be careful being too bullish the market. If you look on this pullback here, that cycle reset. I mean, the could it be that? And then there's two, right? And you go, well, no way. You'll have a deeper correction for wave two, right? There's no way Elliott says that could ever be even possible. Right? That can't be a two right here. Well, the only thing is typically the wave two finds support near the wave four low. And if this is the wave four low, by my count, that's the wave four low, then there is a possibility that wave two is done right here at 204. I mean, now it doesn't look likely. You see this three up. So what I'm guessing is you're going to get a flat. You're going to get a flat, and you're going to back test the breakdown trend, and you're going to back test 190, 188 at some point. Or you're in 5, and 2 comes later, and you're going to back test 188. And 188 will be a great opportunity to go long on the back test of this downtrend line. It should technically do that. It should pull back in whether we're in 5 or 5's over and it's more bull. But the fact is the cycle is over. It's not for shorting anymore. It's for buying the dips aggressively, especially if you can get a deeper pullback. I would love to buy it at 188, 184 in this back test for an investment hold. But honestly, it's been an investment hold all through this correction. I gave you guys this chart a long time ago and to keep an eye on it. And but this is 3 up here. So you got to respect the flat scenario. You got to respect the flat scenario, and bam. So I don't know, but I do think this is kind of what it looks like to me right now, something like this. Bitcoin in alts. Okay, so Bitcoin should go higher because the dollar made a 5th swing lower. So the dollar is showing more downside. So it's more it's like an inflationary impulse, right? So we had 3 swings. This was bearish for Bitcoin and commodities. This 5th swing isn't. So now we're in this consolidation. I do think we got a potential move in the dollar that you have to respect, something like this. Okay, when C happens, I do believe crypto will get hit, but that will be a dip buy. That will be a dip buy on crypto and gold and silver for the next leg lower, because you have 5 down. You should get one more push lower. You should get one more push lower. So that means Bitcoin should continue to run higher, but short term, you could see Bitcoin do a pretty nasty dip if the dollar pumps like that. And that's what I have here for Bitcoin. Short-term traders need to be aware that you could be getting a Y wave down to 39,000, but this would be a dip buy. Now the dollar should support Bitcoin in this area for another push higher. So this would be an opportunity to go long. I do believe this is a great opportunity for a long position, given the nature of the dollar. Again, the surprise would be that this was a flat correction here, 1, 2, 3, and we're in a 1, 2, 1, 2, and it's about to go vertical. Mara is kind of giving you an indication that you need to not get too bearish. So if I was I would be just holding Bitcoin at this point. There's no short in Bitcoin. This is not a short. This is if this happens, it's a buy, and then you're looking at these candles. It looks like to me you got to be careful that we're not in where we have a 1, 2, 1, 2, and then it goes 3 of 3, and we retest the highs, all-time highs of Bitcoin. And again, I'm just reading what the charts are telling me. The dollar index is showing that. So what would that look like for the dollar index? Well, the dollar index, that would mean there is no C. So if Bitcoin's going to do that pump in wave 3 and leave everyone in its dust, then that means this is 2. And you're like, that's impossible. Or more importantly, it could be a 1, 2, 1, 2. And we're all wrong about the dollar and inflation. And the dollar completely collapses in a wave 3. And then this wave goes down a whole nother cycle lower, and it is going to double correct, which this is So the dollar index breaking this low was very, very significant for the entire stock market. This was super, super critical tell the market made breaking that low on December, looks like 14th. So whatever happened December 14th, the market said, yep, we're going to start it. We don't want dollars anymore, which will infect the rest of the stock market. So if the market doesn't want dollars, and that's going to help risk assets. It should. And it's going to help Bitcoin and stuff. So that's why if the dollar gives you a gift and spikes, like I showed in the flat, which it should, because this is too shallow in my opinion. If it does this C, that's a great opportunity to get in crypto if you missed your move in crypto recently. And gold and silver, by the way, too. I will be if we get this C, I will be an aggressive buyer in crypto, gold, and silver. It really puts some money to work on the long side. Take advantage of that. But I think a lot of people have the idea I have, so that's why I'm worried that won't happen, and the market is just going to unravel, and you won't get that chance, and you're going to have to take some risk. Now, silver is showing it's right on the downtrend line of a massive breakout since the March. Look at this downtrend line, all the way back from 2011, and we're testing it. Oh, it wants to break out so bad. Oh, it wants to break out, and every time it just can't do it. You had a false breakout here and got slant, and now here you are again. So close, but so far. But man, if we could get that breakout, even if we break out and go to 25, 26, this would just be a market buy long position, because the consolidation is too extreme for too long. I think the pump could be it could be smooth sailing up to $47. It could be just such an easy money, and then I wouldn't think of selling it. I wouldn't even think of selling it with that kind of breakout if that were to happen, because if we could break out of this pattern, eventually we would. Then you're looking at silver probably 100 ounce. Again, yay, this may be great. My silver correction's worth $200 an ounce. I'm rich. But hell, I got to pay $15 a gallon for gas, and my Lambo's now $1.5 million and not 200,000, and I got to go, buy a Ford Explorer, but that shit's now 120,000, and I got to buy a electric car because that's what's going to happen. That's what this is saying is going to happen. That's what this is saying. So just be careful what you wish for. You moon boys out there, you guys that are like, I'm going to be rich in silver and Bitcoin. Well, what if your Bitcoin can't buy you shit anymore? What if $1 million Bitcoin doesn't buy shit anymore? What are you going to do then? Unless the government adopts it as a currency, you're not going to be able to use it. You trade it amongst each other. That's the point. That's the big thing about the Bitcoin moon boys that are, it's like if Bitcoin's $1 million, what do you think everything else is going to be worth? You're going to go to Kmart and buy a t-shirt for $50. That's what's going to happen. That's what I think will happen, guys. That's what I think is, and I think that's what this gold and silver is going to start. If we get these breakouts and we start getting those kind of prices, I think that's what it's saying is coming. It's coming. And then if we get moon boy on the indices, then that's where we're heading. And then the value of your dollar is going to be worth shit anymore. You're not going to have your value of the dollar is going to be down in the gutter. So whether the Fed raises rates to 30%, it won't matter anymore, because the confidence will be lost, and maybe there's a new system. Maybe the BRICS nations take over. Maybe there's some other constitutional crisis and the country starts splitting apart, and there's a parallel system developed. We don't know no one knows the future. It's unpredictable. I'm sure the people in the 1820s did not, think what would happen in the 1860s would happen, and I'm sure the people after World War I never knew there would be even a more horrific war, just another 15 years later, that they would all be fighting. So no one knows the future. No one knows but the charts are the charts, and the charts are telling me that we've got a weaker dollar, we've got commodities that want to move higher, and you got to respect that, and and that's the bigger picture. But short term, like I said, very short term, you could see see this drop in Bitcoin, and you could see this quick little pump in the dollar. But I think that's a gift to go long. That's a gift to go long, crypto and metals when that happens. I'll end with the XLE, guys, and then that's it. So the XLE is tied to the oil market. So I'm watching oil like a hawk. Okay, I'm watching oil like a hawk. If I can see oil break out and negate my chart with a break above 75 and a break of this consolidation here, this downtrend, let's see if I can draw a line that connects these together. Something like that. 77, 78. It's probably time to market buy XLE and just play it because it's going to go up. I mean, if this is going to happen in oil, it's going to go up. But I don't like the XLE. I like the OIH better. That has a better chart than the XLE. The OIH looks amazing, and it's actually showing me that maybe oil is going to pump. Because if you look at the OIH chart, you got a massive inverse head and shoulders, and now you got the right shoulder. You had a false breakout here, and you came back, and now you're in a buy area for a potential wave 2 and a run-in flat. If we could get another pullback down, the other option is 2 is done here, and then you have a 1-2-1-2 setup. But this is a buy at 308. It's a buy at 308, 280. Now the surprise is, of course, two runs down, and then we get oil runs to that $50 level like I have, and then comes to 219, and then the XLE will drop to the 60s or whatever. So the XLE hit a buy. So I'm keeping an eye on it. So the XLE, the ultimate target is a retest of this low at 65. And a big flat pattern and an AB and a 1-2, 1-2, and it's just kind of, then we get this drop and then it's over. So this is long term what I'm thinking the XLE is going to do. But I was watching oil the other day, and that's why I updated my chart here on this. I said, well, what from an RSI standpoint, what are we looking like on the XLE? Well, the XLE, let's go to the weekly RSI. If you just look here, you've got no divergence here on this low. So could the low be in here at that moment? Could that be the low? And we had this some kind of run-in flat here. We're in 2 here, and we're in this like 1-2, 1-2 setup. So I said, well, if this is the alternative count, which would be very bullish to be in a 1-2, 1-2 setup, or heck, I could put 1 here. It doesn't matter. I probably put 1 here. Then you would want to buy it here against $80. I didn't take a long position in it but if oil can invalidate my chart, I do believe on the XLE could run, and then you're looking at a 1-2, 1-2, 1-2, and then the XLE will jump out of this consolidation and run to a wave 3, and that should hit some targets that I have. That will be somewhere around, if this is a wave 3, the XLE should come up to somewhere around 191. And that will probably be very inflationary, right? Maybe even, dare I say, hyperinflationary. So that's a chart that no one probably is looking at, but you have to respect, look, the downtrend's broken. I still don't look, that looks like 3 up, not 5 up. So it just seems to me that it's got more downside coming, like I have shown here. And then that could be, it just seems to me. But I am respecting this area. But I'm just keeping an eye on it. I'm just watching it right now. But I would like to see this drop coming. I would like to see this drop coming. And again, but I do like the OIH as a better trade. But the OIH, I had it as a flat. Like I got out of Schlumberger, and I was giving Schlumberger long, You know, before even the guys on TV were talking about Schlumberger. I mean, they started pumping Schlumberger, and I was like, I was sellers to those guys. But Schlumberger was a great buy opportunity if you followed me. I think we bought it on this three-wave move down here, somewhere on this, and then we rode it all the way up to 61 and got out because it just didn't seem like the right time. So now if you look at Schlumberger, you have 3 down, but this is pretty extended. So it wouldn't surprise me to see another leg lower. And if that means, and then again, you have overlapping waves. And remember what I said, overlapping waves finish between the 4 and the 2. So that would bring Schlumberger to 38. So that's why I think the XLE is going into the 60s before it's going to moon and before the OIH is going to moon. So I am looking at Schlumberger as a long-term investment opportunity at $36, $33 to play that wave 3 in this area, and that should bring the OIH down to 244, 231, or maybe even as low as 218 here, you know, somewhere down here. And then that should also bring the XLE, you know, down to this area, and that should bring oil down. And that should that's my thoughts on the market right now. But oil has me concerned because it's getting support and natural gas is getting a bid. So that has me concerned, but I'm not doing anything. I'm just watching it because there could be an opportunity. So there could be emergent opportunities in the energy market. I just think you just want to keep an eye on it. But yeah, if we get this push down, not until we get here. When we're down here, that'll be the time to buy. I think the XLE, OIH, Schlumberger, rig, all that stuff for a massive wave 3 pump. And this will probably be when the indices are at 520 SPY and the growth stocks will peak. And this will be a repeat of 2022 all over again. The dynamic, but only more severe again. So. All right, guys, I'm ending the channel right now. Thanks again. I appreciate it. And have a good Christmas. And we'll see what next week